How did you feel on that very first deal?
Like you basically pointed it out. I was like shitting my pants the entire time.
Yeah.
Once the deal got accepted, and then you get instant buyer's remorse.
Yeah, it's like literally a second later though. You're like, I got a deal, and then you're like, I got a deal.
Like, oh, what am I going to do about contractors, renovations? I didn't even have my entire money situation figured out. So it was a nightmare, but it made me a better investor, if that makes any sense.
Everybody remembers their first time as a real estate investor, and Austin Yeh is no different. So in today's video, he's going to break down for us exactly how he approached his first deal, as well as kind of discussing a lot of the fears and trepidations that come along with that subject matter. It's really scary jumping into real estate investing, but I find that once you make the leap, you kind of become a serial repeater where you want to keep doing more and more deals. That's definitely the case with Austin. 13 deals in 2 years as a brand new real estate investor. Absolute amazing story. But let's go back to where it all began with deal number 1.
What's up YouTube? It's Adam JD Martin here with Austin Yeh, and today we're taking over Matt McKeever's YouTube channel to take a look inside Austin's very first deal. On the last video you saw that Austin was able to do 13 deals in the last 2 years, and I really want to get to the bottom of how one feels about their actual first deal. For me, I was shitting. I was so scared. It was terrifying, and I had Matt McKeever literally in my back pocket for the whole thing. He was telling me every single day about the roller coaster of emotions and how to deal with that, and I still found myself in the lows on some days thinking, you know, did I make the right decision? What am I gonna do to pay for this? How am I going to afford this? And what happens if I can't get my money back out of it? Because I too had to borrow a bunch of money to get into my first deal. I'm not sure if that's the case for Austin, but we're gonna find out. So tell us, man, how did you feel on that very first deal?
Like you basically pointed it out. I was like shitting my pants the entire time.
Yeah.
At time, I felt very confident and happy once the deal got accepted, and then you get instant buyer's remorse.
Yeah, it's like literally a second later though. You're like, I got a deal, and then you're like, I got a deal.
Like, oh, what am I going to do about contractors, renovations? I didn't even have my entire money situation figured out. So it was a nightmare, but it made me a better investor, if that makes any sense.
Of course.
Before digging into the first deal, like what got me here was basically, I always mention this, but I always like to put it out there. Parents are blue collar worker, typical immigrant story.
Yeah.
So I don't come from money, and from grade 9 to 12, I worked every summer a full-time job in a warehouse, and I saved all of that money. Going to university, I had a considerable amount of scholarship, and I worked about 16 months of internship. So coming out of university, I actually didn't have debt. I had about $40,000 saved, which is quite a lot for the age of 22, 23. But obviously it's not enough to buy real estate. I was looking at properties in Toronto, and there's no way in hell you're going to be able to even afford a parking spot with $40K.
Like legit, right? A parking space is probably 50 grand these days.
Oh, dude, it's 120K.
There you go.
Yeah, in downtown Toronto, 120 grand. So I couldn't afford anything in Toronto, but I always thought to myself, I had to invest in my backyard. If I'm not investing in Toronto, then there's no other markets out there. Every other market is useless. But I had to take that limiting belief out of my head. And I had about $40,000 saved, and I went on Google and researched what markets are out there that are affordable in terms of affordability.
Yeah.
I saw London there, I saw Windsor, and even at that time, $40,000 was not enough to do a deal at London with all of my own money. But it was at Windsor. So that's how I kind of narrowed down my market, that, okay, I'm going to invest in Windsor because I can afford it, just barely. And the numbers made sense. It was you're able to cash flow in that market. So what I did was I looked for properties on the MLS, and I contacted the listing agent of a property I was interested in.
Yep.
The listing agent said that that property was sold, but hey, let me work with you. And me not knowing any better at the time and doing very limited research, I mean, just watching maybe, I would say 4 Matt McKeever videos, maybe like 2 Mike Rosehart videos, reading Rich Dad, Poor Dad, which is a good mindset shift, but it doesn't teach you anything practical.
That's right.
Nonetheless, I was very eager to get started, so I didn't really have that analysis paralysis. I was more of the exact opposite, not knowing enough and pulling the trigger.
I honestly think you're still better off, at least these days with the current market, to make that decision. I would rather, if I could go back and I was in your situation and I knew the outcomes, like I would obviously, I would take the situation where you're going to pull the trigger faster than what you know, because it's going to force you, man. Like it's kind of like the 4-minute mile, basically, where like you're just showing yourself and you have to run your own 4-minute mile at that point, but like everybody else around you likely is telling you that it's possible. And so now you're going to find the ways, you're going to find the solutions of how to get through that. And obviously there's risk there. We're not telling people to go and take unnecessary risks, but I would honestly rather be, any day of the week, I personally would take being somebody that takes massive action over somebody that's stuck in analysis paralysis.
I agree, because 100%, like the more you know, the harder it is to take action, believe it or not, because you want to try to hit all of these criteria, and I don't think I had a deal that hit every criteria in the checkbox, right? I just was like, it's good enough.
100%. And I think a lot of people do get stuck there too. Experienced investors or people that have done a lot of research or a lot of reading, they always like to find and focus on these little flaws in a property instead of the opportunities that are there. And we've won countless negotiations against other experienced real estate investors that just simply can't see the solution for all the problems that they're focusing on. So it's one of those situations where if you ready, shoot, aim, you can honestly put yourself in better positioning to make these great plays after. Like obviously after you bought the property, you might not have known everything, but you took a very systematic approach, or at least you used the tools you were taught to then get yourself into a good spot. Because like I'm just really briefly looking at these numbers for the first time, and I would take this all day.
So going into this deal, I worked with the first realtor I met, called the listing agent. She says, I can take you to Windsor and show you some other properties. Booked a meeting with her, and she took me to 4 or 5 properties, and then she says, all right, which one do you want? And at that time I was like, okay, maybe
only 5 in the world, right?
Exactly. He's like, this is what's on the market, have your pick. And I ended up picking the cheapest one. So this was listed at $150,000, and at that time I was able to get an inspection done. So I put in an offer conditional on inspection, and once the inspection came back, there were some things that were wrong with the property, like the roof, small things. The roof needed to be replaced. There were minor electrical issues, but nothing significant. And obviously it was a cosmetic mess of a property. Despite all of this, still went through with the property of my first deal, but was able to negotiate it down $20,000 based on having the inspection report. I could circle things and say, hey, this is going to cost this much to fix, this is going to cost that much to fix, and that gave me negotiation grounds. So was able to pick it up for $130,000.
That's fantastic. Casey Wong, actually, I know you guys all love Casey. Casey often talks about using that tactic right there with large multifamily deals. So that kind of strategy and these strategies, they work all the time with all types of sellers. So when you are going to purchase a property, do take the time to, whether you're getting a formal property inspection or not, take the time to actually thoroughly inspect the building yourself, if not having a professional to do it, and then either get quotes from professionals, or if you are already at a position where you understand the costs, use those costs to your advantage and use those to negotiate with your seller. We're in the middle of a deal right now today where we're going to do this exact same thing, because that $10,000 is actually a lot when you start looking at some of these plays and some of the numbers and how it all plays out, because you could have come out essentially another 20 grand deep into the building after that, but instead you only had about 12,000 or 13,000 left in the deal. And like that's huge when you're getting started, guys. And as you're going further, it still does have a big impact, especially if you're buying bigger buildings. Like this is where you're going to start getting, a couple zeros added to your negotiations, right? Not just 20 grand. This can save you hundreds of thousands. And especially if you're buying multiple deals like Austin has at this point, like if you're getting 20K off each deal, you're basically getting a free property at these prices every 5-6 times you do that, right? So anyways, keep going through here.
For sure, yeah. So I ended up picking it up for $130,000. I thought, great, now that I have the property, I'm happy, excited. I shared it on social media. What the hell do I do now? I barely knew an agent at Windsor. Definitely didn't know any contractors. I'm working a full-time job at a Big 5 bank in a finance position. So the hours are not easy, right? So I needed to figure out what the hell I needed to do. And after reading a couple of other real estate books and browsing the internet, watching more Matt's videos, I realized that I need to systemize it and build a team. Yeah. And that's when I started working ass backwards. I had the property and I need to figure my shit out. So I went down to the Wind City meetup, met other investors down there. There was one investor I met in particular. I don't think I've ever seen him again, but he recommended me a contractor. Contractor was like terrible. Yeah. I did zero vetting, but it was a cheap price. Yeah. They promised a cheap price. They said they can get it done in a month. And me not knowing anything at that time, I didn't want to be stressed. I said, I found a contractor, let me go through with that. Yeah. And with that contractor, it was a nightmare. So when the property ended up closing, it took basically 2 weeks before the contractor got started on working on the property. Yeah. And obviously this is money coming out of my pocket. 100%. I don't have a lot of money. $40,000 is not enough to do a property. It's a very limited amount of cash. Yeah. So as I was getting through all of the holding costs, and he came back with me with the quote, it was much more expensive than what he initially promised or said. Yeah. It was about 5 or 10K more expensive than what he promised. Yeah. And I didn't have that money. So I scrambled. I went to my mom, I went to my dad, I went to my girlfriend, who, my parents being blue collar, asking them for money is not an easy thing, but it's what it came down to. So they loaned me about like 10 grand in total. And going through that process, the contractor didn't have an official invoice. It was kind of an email saying, this is the work that's going to be done, extraordinarily high level. Yeah. Just sign off on it. Just say, got it, thanks, you can go ahead. So these are red flags that I should have realized. And as a more experienced investor, I do realize that now. How I could have avoided that mistake would have been when I went networking. Talk to multiple people, get multiple contractors.
Multiple quotes.
Exactly, get multiple quotes, see their previous work, right? Instead of just talking to one person and going through with it. And now I'm obviously doing that, but before I didn't. And it just goes to show, man, like even if you make mistakes and like shit hits the fan, you can get over these things.
So well, you can work your way through it though too. You didn't just sit on your hands there. Like you actively went out and did the hard thing, right? You had to ask for money. You had to go and find those resources. And I think that's really key success factor here. Like you're not going to have all the chips. You're not going to have all the answers. You're not going to have, like, I don't care what your plan is. It's almost never going to go accordingly, and that's the truth no matter what level you're at. I mean, even today, the reason I'm sitting here on the couch with Austin is because Matt's tied up trying to do a deal, right? He's saving a deal right now, and I think that's amazing for everybody to really recognize and like embrace. Just embrace it. You need a solutions-oriented strategy where you can bring yourself to the table every single day. Get out of bed, go to work, get that stuff done that you've been putting off, and then when things are on fire, you got a big problem, you got to work twice as hard. Don't think like, oh man, I'm overwhelmed, I better slow down here. No, this is your opportunity to actually speed up, right? Double your actions, make more phone calls, call more people, do more networking, figure it out. Like, I think it's amazing. Yeah. And in your first deal, that's the best way to learn. Best way. Like, you couldn't replace that with any seminar, any coaching. There's nothing in the world that can teach you that feeling when you're like, fuck, I am short 10K, right? And like, you know, 10,000 for us right now maybe isn't even a lot of money, but like at the same time, that first deal, when you're whatever amount it is, it might be 10K, it might be 50K, it might be $1 million, right? Because I've talked to a lot of large investors at this point where they're having the same problems but with a lot more zeros. They're like, we're 3 million short and it's closing very soon, and you're like, yeah man, you got to go make more calls. Like, exactly. It works the same at every level.
Because I tell, like with this deal, I would have told myself I would never ask my parents for money. Yeah. If I didn't buy this property, I would have told, I just want to put in my own money. I'm not comfortable asking for other people for money. But when your back's against the wall, you figure shit out.
And I think
exactly. And my back was against the wall a lot of times here. So when the contractor went in, it took pretty much 3 months when he said it would take 1 month. So already timelines are all screwed up. Renovations are going over budget. And managing that from Toronto was difficult. It was a lot of trust factor involved. I wasn't going down to Windsor all the time.
Yep, of course.
I tried to manage on my cell phone, and at times I had to take matters into my own hand, and I had to drive down there, take vacation days, and sleep over there to just make sure everything was tracking along properly.
The hustle, man.
These are things that you have to do when your back's against the the wall,
Yeah.
right? And you tell yourself you never want to get in these situations,
Yep.
but when you're in it, you figure it out.
Yep.
So going through all of that in my first property, at the end, the initial investment was about 51K. Doesn't seem like a lot, but it was a lot to me at that time because it's my first deal. I know very limited information in real estate. I was making every mistake, and this was going over what I expected to spend. So it was initial investment in 151K. Then I knew that with the renovations that were completed, I bought the standard of the property a bit higher. I did some value add renovations. So cosmetically, I gave it a huge lift: paint, trim, flooring, new kitchen, open concept.
Yep.
So by doing those strategic renovations, at that time, I watched a video on burring, and I wasn't planning to burr this property, it just happened to be a burr. So I got it reappraised in about 3 to 4 months after the renovations were done, and it actually appraised for 178K.
That's amazing.
Exactly, yeah. I was super surprised with that. But again, I was not...
What is up, you guys? Matt McKeever here, and have you ever wanted to join my team? Do you want to become a real estate investor? Have you seen what we're doing with wholesaling real estate? Maybe you want to become the next Adam Martin. Or maybe you want to become the next Mike Nowicki. How about Shahir? Or maybe you want to be Andrea. Or what about Tyler? Well, if you're interested in joining my team and going all in on real estate investing, what I need you to do is we're going to throw an email address down below this video. Click it, send us an email, give us your information, and maybe you can move here to London, Ontario and go all in as a real estate investor. We make offers, we buy fast, never gonna miss a deal cause we pay cash. Offers, 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 deals, deals, deals. Tell us, Mr. Seller, what price do you feel? Cause we're Southwestern's biggest source of deals. Yeah! Boom!
So I got it reappraised in about 3 to 4 months after the renovations were done, and it actually appraised for 178K.
That's amazing.
Exactly, yeah. I was super surprised with that. But again, I was not anticipating it to appraise for 178K.
Yeah.
I did this deal without the intention of having that. So the more you know, again, it could be a limiting factor, right?
Yeah.
Because had I known that this would appraise for 178K and I was looking for a full burr, I would have turned this deal down in a heartbeat.
Yeah. Well, it's true, but at the end of the day, like, look at all these lessons, man. You can't pay for all that. Like, at the end of the day, you paid essentially 12 grand to learn all of this.
Exactly.
And I would say, you know, and if you disagree, let us all know, but I think that this deal would have catapulted you into your next deal, into building that credibility, into really leveraging this opportunity and making the most of it. And guys, not every deal you're going to win on this bottom line. It's not that's the case. Like, you need to make the most out of every deal, and that means sharing your deal on social media, sharing your work and progress on social media, sharing your successes, and most importantly, sharing your failures so that you can build credibility, build a brand, and really capitalize on everything that there is to gain from getting into your first deals. And so I think that this is one of those huge opportunities to say, hey, I bought this, I didn't actually know what I was doing, but I actually kind of came out pretty good. And, you know, like, for my first deal, it's not that bad. And here's what I learned. Here's my learning opportunities. Here's what I'm going to do on the next deals. And, like, I know you guys watched the video already where we talk about how Austin's done 13 freaking deals in the last 18 months. So I already know that, you know, he made the most of this, but I need you guys to make sure that you focus on that as well too. Just because you end up with 12K stuck in the deal doesn't make it a bad deal, to be honest. Like, that's a fantastic deal. It's all relative, again, like we spoke about in the last video about Toronto's market and getting into pre-construction condos there. It's all relative, guys. And if you make the most out of it, that 12 grand, I mean, that's a great tuition fee, right? And it's not even like you're losing that. It's just being held in your property for you, right? That 12K is not real proper cost, right? That's held equity. That's yours. That's your 12K. If you want it, you just have to sell the building, right? So it's not bad. Like,
not at all.
Or it's secured line of credit even. Like, there's more ways, guys, to access that capital if you truly needed it. And then from here, as you go forward in time, and if this market continues to appreciate like it is, which is fantastic right now in Windsor, but in any case, you're getting equity pay down, right? You're paying down your debt every single month with your mortgage payment. Hopefully you have tenants doing that for you. That's the point of the investment. And then later you can actually go and get second mortgages on this if you needed to, to, or home equity line of credits, anything, right? You can use these deals to really make more for you in the future. So not everyone has to be a home run where you're getting $100,000 back after all your costs on a refi. Like,
exactly.
I think this is a great deal, to be completely honest, for your first deal,
sure,
especially with like the stumbles, right, and all those lessons. Like, it took you 3 times as long and double the cash, or 50% more cash than you expected, and still I think you came out great.
Top. Exactly.
Yeah.
So throughout this entire process, and I'm glad you mentioned it, I recorded my journey. So when I was making mistakes, I was documenting those mistakes. I was sharing it. I was sharing my lessons. And a lot of people document with the intention to raise capital or to whatever the case may be, right? But that's usually why people document stuff. And they're afraid to show their blips, especially when they're starting off. But that's extremely important, that you're completely visible and show everything throughout the process. It shows that you can overcome these things, 1. And 2, it shows the reality of real estate. Because if you partner with someone and something ends up happening and they never saw that in your story, then they're going to think this is a one-off situation, you're screwing me over. But no, the reality of real estate is that there's always challenges that come up, but some people don't like to show those challenges, especially beginners. So I highly stress beginners, show everything, the good, the bad, the positive, the negative, and you will get so much more respect for being visible, and you will be more relatable to other people, because it's not all sunshine at the end of the day.
Not at all, guys. I mean, I've had a 4-plex sitting vacant for basically a year now, and I mean, there's been stumbles and hiccups and money spent all over the place, and eventually ended up just basically buying out my partners, because I realized that I was like, this is no longer the deal that you entered, right? So if you're not comfortable with this anymore, like, I'd happily buy you out, because I think it actually benefits both of us to be transparent with each other, right? Enter those agreements with goodwill and good faith, and then carry that out throughout the whole deal, right? So whether that's either that could be an agreement with yourself if you don't have partners, but like, if you're sharing your story, the transparency element is absolutely crucial. I think somebody is so much more willing to do business with you. They know you, they like you, they trust you, they want to do business with you when you're actually sharing the full story, because everybody's been there. Nobody has executed a flawless deal. Like, if it's happened, it would be so extremely rare that's not even funny. And like, at least nobody in this house has executed a flawless deal where every number was hit exactly as they anticipated. There were no unexpected surprises, no unexpected costs, no scope creep, no like delays or contractor issues, sourcing issues, financing issues, legal issues. There's always something. So I think sharing that, it's real, right?
Exactly.
And nobody benefits when you share something that's not reality, right? If you're not sharing the facts, like, you're hurting yourself in the long run. So excellent learning.
And even if someone has 10 or 15 properties and you only have 3, if you documented everything, people know who you are. People are more likely to joint venture with you, because who the hell knows a guy with 10 or 15 properties? He's keeping it to himself. He's not sharing it with the public. And to raise capital, you got to get yourself out there. And another thing that I hear from a lot of people is, as I was documenting this entire journey, throughout my head, I was very worried if someone in work finds out, what's going to happen. And the reality is that if you do a good job at work, or you do what you're supposed to do, whatever you do on your spare time, it's your business, right? Most managers will be understanding, and if your manager is not understanding, maybe it's time to find a new culture fit. Or what do you prioritize more? You're doing real estate to retire eventually. I'm assuming most people are doing real estate to eventually get financial freedom. If that's what you prioritize more, and you need to end up raising capital, that should be the priority. That your decision's made, you have to document everything, right?
100%, guys. And at the end of the day, it's problems or profits, right? So what you want to do, what I first think of when I'm thinking of a manager coming to me and be like, man, you're taking all this time, or you're distracted, or whatever, you want to explain to them the exact reason why you want to do this. Hey, I'm looking to build passive income to support myself or my family and my goals, whatever it is, that's your why. And then one of the things that I would suggest doing, pivot. What's your why? Like, what keeps keeps you invested in this? Why are you doing this? And I think you might find out that they have similar goals that are framed slightly different than you, and they actually might just be your next partner. So flip this back on them, right? What can I do to help bring you closer to my why? Because I believe that by doing this, I'm actually getting closer to your why and the deliverables that you're expecting of me through this job. So I think you're a better person when you're not stressing about money, right? You can probably execute further at your job. You can probably execute better for your family and for everything else. So I think it's a great way to bring them in, right?
Yeah, that's perfect that you said that.
Don't contend with people.
Because your manager might see this. Probably won't, but they might see this.
Yep.
So you got to be okay with these things. And you might have people thinking, what the hell are you doing as you're documenting all of this? Some people will think it's showing off, which you might not. You're not trying to show off, you're just trying to document again. Not everyone will understand you and understand the mission or your why or what you're doing, but no matter what you do in entrepreneurship, you're going to get kicked back. It's not just 100%. Real estate. It's anything. 100%. It's anything and everything, right?
And it comes from the scariest places, right? It's typically going to be your closest friends, your family, your coworkers. These are people you see every single day. They're going to be pushing back on you like, man, Windsor, right? Because if you're sitting in Toronto and you're buying properties in Windsor, I can already hear the first conversation. Oh man, Windsor? Like, why would you buy in Windsor? Isn't that place gross? Isn't it close to Detroit? What if the economy and the whatever? And you're like, okay, man, but like, let's always stick to data, not drama. So we're always using numbers. We're always using objective facts to base our decisions and make these investments. And that's just simply how you can defend yourself in these and represent yourself in the best way. And then ultimately, you're going to end up most likely changing your social circles anyways and changing the people that you allow to influence you, because it really has a big impact. And I know that you guys right now, you're at home or you're at work at your office, which I think is ironic, but you're sitting here watching Matt McKeever's video because you want to learn, you want to change your social circle, you want to change your center of influence. And managing the media and the people you consume is going to be an extremely large part of getting there. So changing who you're listening to, who you're taking advice from. And one of the big things we actually do like to stress around here at the mansion is we always talk about counsel, not advice. So advice is taking somebody's opinion, and that's based on things that they've heard, emotions that they have, and past experiences that they may or may not have had or experienced from other people, versus counsel, which is actually taking actual advice that is from people who are doing what you want to do, right? So if you want to do BRRRRs, maybe talk to Matt McKeever, who's done a ton of them, right? If you want to do flips, there's people out there like Sean Allen, who does like 30 plus a year. Like, that's who I want to talk about flips to, as opposed to just talking to, you know, my grandma or somebody who's never done it, but she's worried. She's worried about Windsor. She's worried about this $130,000 purchase price. And oh my God, you put $51,000 into this property that's 2 hours away. How are you going to manage it? How are you going to manage the people? How are you going to manage the contractors? What are you going to do when it goes over budget and over price and over scope? Like, these concerns are going to come at you from all angles, and usually, I just want to drive this home, it's usually going to be the people that are closest to you and that you trust the most. I can only advise you, please do reach out to people that are doing the things that you want to do. It doesn't have to be real estate, you know, but if it is real estate, you should really niche it down. So if you're looking at flips, talk to somebody that flips in your market, okay? Talk to a local expert. Talk to somebody that does this all the time. And it's going to be the same for all your power team and everybody you work with going forward. So.
And it was the exact same thing with my family, right? They didn't understand what I was doing. You're gonna get kickback from everyone, and you might not have the answers to some of their concerns, because I know I didn't. They said, what if a recession happened? I had a game plan kind of as long as it cash flows, I can sustain a recession, but they're gonna ask you questions left, right, and center, and you probably won't have the answers to all of them when you're starting off. But those are the people you don't want to surround yourself with, because they're pulling you away from your goals and what you want to achieve.
Anytime you can't answer one of those questions, you should be looking inside at yourself and at your strategy and thinking, oh, maybe I do have a weak spot there. Maybe I should seek to understand better that subject, right? There's a professional development opportunity there. So those are all opportunities in disguise. Once again, guys, it's always going to come down to problems or profits. Absolutely. If somebody's asking you something you can't answer or you can't teach them, you need to go and analyze that thing again for yourself and really truly seek to understand it. It's really important.
And despite all of these mistakes, hardships, and all of that I learned from my first property, real estate is an extremely forgiving asset. Over the long term, it's going to appreciate. Land is scarce, and given that land is scarce, there's only so much that you can develop. And as population continues to grow, people need to buy a place or rent a place. And luckily for me, despite these mistakes, I am looking to sell this property and redeploy it into another project now that has higher cash flow. But over this 18-month period of time from when I purchased it to now, it is worth probably around $250,000.
Amazing.
So that's pretty much $100,000 I made in profit in 18 months.
That's a huge spread, guys. Huge spread. So now you can go and refinance this again if you want, or you could sell the asset and buy other assets. You could grab that HELOC right now, that home equity line of credit, and borrow against the house. You could grab a second mortgage. You could do whatever you want to access that capital. And again, like, I mean, you got a good job too in Toronto, but I imagine like you're probably not making a whole lot more than that $100,000, which like you did relatively passively, right? This project only took 3 months and now it's just sitting there making you that money. And you're going to work every day, right? 40 hours a week, 50 hours a week to earn that money, where this vehicle can actually just create that for you. So,
and it might not be a matter of 18 months. Again, real estate, you got to keep in mind, it's a long-term.
Sure.
People like to think that, people like me, I guess, kind of put the projection out there that you can, the purpose of real estate is to kind of do what I did in my previous video. So all of this shows all of my entire portfolio. But understand that it is a long-term game first, and scaling quickly is a nice bonus to it. But when you buy a property, always have the mindset that I'm going to buy and hold this. That's the real way you create wealth in real estate.
Love it.
And yeah, that pretty much wraps up the first deal.
I love it, guys. Well, thank you so much for tuning into this video. I hope you loved this video with Austin Yeh. Give him a like, give him a follow. If you're not already subscribed to the channel, for God's sakes, hit that button, get subscribed. We're launching new videos every single day for you guys to consume and learn from, and we need you to grow with us. So hit that subscribe button, show us a little bit of love, and stay tuned for the next video with Austin Yeh. We're going to talk about actually managing these properties from afar and what that looks like when you've got construction teams that are 2 hours away from you and you can't see the property for your own eyes. So again, I'm Adam JD Martin. Give me a follow too on Instagram. Show Austin some love. He came all the way from Toronto today to do these videos for you guys to learn from. So drop us a comment. Tell us what else you'd like to hear from Austin or from myself or from Matt. Give us some YouTube video ideas, because we're doing 366 this year. It's a leap year. We're going to need some content ideas. Show us some love, guys. I know we don't have the fun socks that Matt does, but we can still make good videos for you. All right. Have a great day.
Thanks again to Austin for taking the time to break down his very first deal as an investor. Again, it can be very intimidating when you're brand new to this game, but there's kind of a theme that I've got going in 2020, and that's if you make 0 offers, you're going to get 0 deals. So it's really important that we get over those limiting beliefs, that we crush those fears so that we can start taking action as a real estate investor. So if you guys enjoyed this video, what I need from you is a big thumbs up, so smash that like button, hit the subscribe button if you're new to my channel, and jump in your comment section and let me know, what would you guys like to see in future videos with Austin, or who else would you like to see break down their very first deal on my YouTube channel. Otherwise, if you guys want more Austin Yeh, check out this playlist right here, or if you just want more great Canadian real estate content in general, well, check out this playlist right here. Again, thank you so much for watching my YouTube channel. I'll see you in the next video.